Hello, and thank you for joining us at xm.com for this special report video. We'll be taking a closer look at the euro. I'm Christina Marujos. Joining me today is Senior Investment Analyst Rafi Boyajian. Rafi, the euro posted an impressive comeback after the worldwide lockdown in the spring, supported mainly by the unprecedented stimulus by the ECB and the European Union. But lately, the euro has been struggling to regain a positive footing. Of course, one reason for this is that virus cases have begun to escalate again across Europe, and the latest economic data suggests the resurgence is hurting the recovery. How can the virus developments affect the euro's performance moving forward?
So Christina, this slowing recovery is really the main drag on the euro at the moment. And we saw this shifting picture between the European recovery and the US recovery. That started emerging actually before the euro started to drift lower. We did see in early August, in fact, that the European recovery wasn't quite as strong as we had initially were led to believe. At the same time, the US economy appeared to be a little bit more resilient than expected to the second wave in the US. Of course, the US had the second wave during the summer. So the euro in Europe, the second wave is actually one step behind the US. And so that we've got this shifting picture in the recovery. So that's obviously having an impact in the euro-dollar exchange rate. But there have been other factors as well. And mainly, I guess it's mainly since the start of September, that we've got a bit of risk-off theme going on. We've got election uncertainty building up in the US. So that's having a global impact for risk appetite. And also the fact that we still haven't had a fresh fiscal stimulus package in the US. So all of this has hurt risk appetite, and that in turn has boosted the dollar. And that's why we're seeing the euro struggling so much lately.
Well, speaking of the U.S. election, it brings me to my next question, because it's impossible not to talk about the political developments in the U.S. and how they might affect the euro as well. We're already seeing the election uncertainty generate some risk aversion, which is lifting the dollar. What kind of an impact, though, can we expect the U.S. election result to have on the euro?
So it might not be too obvious, but actually part of the reason why the euro and even other currencies have been stuck in a sideways range for much of September is really we don't know what's going to happen at the US election. The election is not going to be just about who's going to be the next US president, but that might also impact whether or not we're going to get a fiscal stimulus. And then whether or not we'll get a fiscal stimulus would probably determine whether or not we're going to get additional monetary stimulus. So there's a lot of things that are actually tied to the US election. And that's why we're not going to see a clear path for the euro until we get a clear election outcome in the United States. Now, lately, markets have actually warmed up to Democratic candidate Joe Biden, and he's at the moment, of course, ahead in the polls. So if the Democrats were to win the election, that's probably not going to be quite bad outcome that markets would have perceived it to be maybe just a few weeks ago, because the Democrats have shown that they're supportive of a large fiscal stimulus. So if they do win, or maybe not necessarily win the presidency, but they might say perhaps get control of the Senate. And that would be positive in the sense that we're more likely to see additional fiscal stimulus, which would boost risk sentiment, and that would also have a positive impact on the euro. The biggest risk though from the election is probably if we have a very tight race and the result is very close, and President Trump loses. Trump has actually hinted that he may actually contest the result of the election. If he loses, he's not going to go quietly, and that it might come down to the Supreme Court to decide the outcome of the election. And this process could potentially drag on for weeks, maybe even months, and that would lead to a prolonged period of uncertainty. In such a scenario, the dollar would probably actually get a boost from all the negative sentiment in the markets, and that would be bad news for the euro.
From what I understand, the next weeks are going to have a lot of developments. But finally, aside from the election and the virus risks, is there anything else we should be watching out for when it comes to the euro?
So once we have the election outcome, the focus is then really going to be on the central banks, the ECB and the Federal Reserve. Now we're already seeing signs that the European recovery is losing steam, and in fact could even be faltering. We did get the poor PMI, which suggested the services sector actually contracted in September. The ECB doesn't seem to be too worried just yet. In fact, we're seeing the voices of the hawks within the ECB getting louder. There seems to be some disquiet as to whether or not the ECB should extend its pandemic emergency asset purchase program beyond the end of the year, or basically at the end of the year when they might potentially have to make a decision on whether or not to extend it. And this will probably determine what's going to happen in euro dollar, because if we do see the ECB taking a slightly less dovish stance compared to the Fed, then that would be positive for the euro, because we know the Fed is generally speaking, or historically at least, has been somewhat more dovish than the ECB, and especially if we don't get a fiscal stimulus in the US, the Fed is almost certain to ease policy further, and then if the ECB does nothing, then that would boost euro dollar.
Rafi, thank you for joining me today, and thank you for watching this special report on the euro here at xm.com.